So the first video in another new series, trade execution. Okay, so essentially this will be short clips of trades that I've taken, either winning or losing trades, most likely winning to show you how the concepts in the TA series are applied, but also potentially some losing trades to show you where I went wrong and where improvements could be made. I reckon this will be a super helpful series, especially for those that have watched the technical analysis series. As you guys I'm sure know, execution is the hardest part. So in this series, we'll be looking at how theses are formed, the execution and management of trades, the thought process around it, etc. And if you've watched the educational series, keeping an eye out for these videos is definitely what you want to be doing and something I highly recommend. So the trade taken was on ETH USDT. I'm going to try and keep these videos really short and sweet, sort of under 5 minutes each time. I'm just going to try and run through the trade that was taken, what I was anticipating, etc. and how it was executed essentially. So it started on the 4 hour. So if we run through a bit of price action here, we are looking for the intra-demand zone that was formed here, okay? So we had the impulse up, intra-demand zone formed, and then the impulse back up again, okay? So at this point, I'm acknowledging strength to the upside, and I'm saying to myself, okay, we have a really nice pocket of intra-demand that was formed here, okay? We just mark that on. And we look at how price develops from here, okay? So we get the tap down, and then the rally back up, right? So essentially I was looking for this move. I was looking for, the expansion to the upside, range to be formed, tap down into the liquidity, and then come back up. So now let's dial down into the lower time frames and look at how the execution was performed. Okay, so we're looking at the 30-minute now. This was the primary time frame for execution. As with most of my trades, I'm taking slightly higher time frames and then dialing down into the lower time frames for execution, okay? So the higher time frames I use for the levels and the zones, and then the lower time frames I'm looking at lower time frame divergences, lower time frame delta dynamics, etc., etc. Okay, so we can see this 4 hour intra demand in blue, okay, in a bit more detail. That's the 4 hour cluster there. We've also got this 30-minute bullish order block marked, okay? So it's the last down candle before the sharp move to the upside. So I have two zones in here. I've got a zone within a zone essentially, 4 hour intra demand, and then the 30-minute bullish order block. So I want to point out that the thought process behind being long is extremely premeditated, okay? I'm looking at strength, consolidation, strength, and I want to join the strength, but I can only do so if I'm given a good entry point, okay? AKA a tap or a divergence back into these liquidity zones. And, this price action went on for, just over a week, I believe. So if we take it from there, 7 days, 5 hours. And I'm not, within that week, I'm not trading any of this lower time frame price action, okay? Essentially what I'm doing is setting an alert at the highs, setting an alert. I set an alert at the range lows here, and then also a further alert down here. Okay, so essentially what I'm doing is I'm waiting for price to come into areas where I'm willing to conduct business. And I'm abstaining from trading anything within this zone because I know that's not where my edge is. And I know that I can't take any trades within this range with high directional conviction, okay? So I'm waiting for the alerts. I'm coming to my desk when those alerts are hit. I'm springing into action only there and then. I'm looking for lower time frame divergences, delta dynamics, etc. And if the right signals are present, then I execute, okay? So essentially, that's the sort of mindset I want you guys to get in, okay? So it's taking time to construct trade theses, okay? It's not jumping to the desk in an erratic manner and just hopping in trades, okay? We're seeing the strength, we're acknowledging the strength, we're acknowledging where our entry points are, and then we're also acknowledging what we want to see, okay? So we want to see the lower time frame diverging into these zones, right? And basically, even within this price action here, okay, I want you guys to pre-plan what the trade would look like if you had the right signals, okay? So it's just helpful to set everything up in advance because there's no rushing at the time, there's no panic, okay? Everything's rational, everything's planned, and then all you have to do is focus on the execution if you see the right triggers. So what exactly do I mean by that? Well, what you do is you set up, just plan what the trade will look like, okay? So you say, okay, a hypothetical long entry would be here. Stop would be maybe not just at the base of this demand zone, maybe give it a little buffer here. And then we're targeting the highs, okay? So this is a preliminary trade idea, okay? We'll have, the R will be evolving, we'll be changing things as we go along. There'll be different TPs that are involved, but just as a sort of baseline sort of structure for the trade, this is what we're looking at, okay? So we're looking at 3.57 R to start, okay? So at this point, I want you guys to just think about it, okay? Think about what this trade looks like, what are the circumstances, and how much you want this trade, okay? What are you willing to size on this trade? Is this a trade you're willing to go heavy on? Is this a trade you don't want to risk very much on? Start thinking about the percentage of your account in terms of risk that you want to apply. And then you work out what that sort of position sizing would look like, okay? So you use risk calculators to ascertain what the position size would be. And from there, you can plan your risk in advance, okay? So let's say you have, a 10K account, for instance, and you want to risk let's say a relatively hefty amount. Let's go for 5% as you have high directional conviction on this trade. If the right triggers are present there and then you basically have to work out in advance, with an entry here and a stop here. If this trade goes against me, what position size will my risk be? $500. And of course, these things change in real time, okay? A lot of this sort of position sizing influence will happen there and then at the point of execution. But regardless, it's really good to have a sort of baseline idea of what the trade will look like and what you're willing to risk on the trade, okay? Okay, so let's run this trade now and look at the execution. So price is still range bound, as we know. Price forms the wicks, comes back, tests the EQ, and then down into the zone, okay? So at this point, my alert's gone off. I'm at the desk, I'm paying attention, okay? So at this point here, we'll have a look at it in a sec, but there was a significant amount of negative delta produced, okay? So that was the first signal, something that we very much want to see when entering into a long position, especially tapping into a liquidity zone, okay? So we had the negative delta produced, and entry wasn't taken here, okay? So I'm going to be as honest as possible in terms of how this trade was executed. I took 2 entries, okay? I took 2 entries. The first, I exited at a very small loss, but a loss nonetheless, okay? And then took a second entry when I had slightly more confirmation. So let's see what that looked like, okay? So I didn't take entry here. What I was looking for was the divergence to play, okay? So I wanted to see, I can see the initial signs of a divergence forming here on the 30-minute. I want to see liquidity retested, potential tap into this 30-minute bullish order block again would be ideal. Ideally, I wanted to see it actually, in honesty, come deeper than it did, but we can see what that looks like, okay? So that's all we got, right? But at this point, we can see, we didn't get a deep strike down into liquidity, which would have been nice in a second sweep of this low here. But what we did get was a really clean 30-minute divergence here, and we can also see that across the AO, okay? So what we have here is a bullish divergence with double confirmation, okay? We can see the higher lows formed on both these indicators. We can see price action by candle bodies forming that lower low. We have 2 nice wicks into the 4-hour intra demand, 1 tap into the 30-minute bullish order block. And at this point, our eyes are set on a deviation of the range lows, okay? We want to play this back to the highs. So this was the aggressive entry that I first took. And the more conservative would be a reclaim of the range lows, okay? Which gives us further confirmation and then play that higher, okay? So what happened next was price just fucked around for so long, okay? So one of my rules with divergences is you want to see the div play out relatively quickly, okay? As that did not happen here at all. I think it was one of these spikes down here. I just cut it, okay? I was just like, no, I don't want to be involved in this trade anymore. Essentially, the entry was further up here, okay? So I think I took entry here, okay? And I cut the trade down here, okay? As it started coming down. Classically, exited at the bottom of the wick. but regardless, I was out of the trade. This, you know, was messing around for far too long for me to have any sort of directional conviction. And I said to myself, this may break down from here, actually. You know, we're now retesting this range low as resistance. This may now break down. This div has had far too long to play out, hasn't played out. But if it does reclaim the range lows, okay, if it pops back up here and retests this range low, then I'll take a deviation play, okay? So price then does exactly that, okay? So as it pops back up here, I set a limit here, right? So this is now my new position. So I'm setting a limit here. And actually, I'm just going to dial down to the 15-minute now to show you the exact execution that took place. Okay, so I've just popped over to Agar on the 5-minute. We can see that that first spike down produced a really nice amount of negative delta, okay? And often what we'll see is price then comes back to retest liquidity. So this is that 15-30-minute divergence structure here. So price comes back to retest liquidity. As it does so, it puts in a smaller negative delta bar, this time just only on the spot market. And then we sort of get the move from there, okay? So from a delta perspective, we're more than happy with what we see here, and that box is ticked. So here, looking at the 15-minute, again, you can sort of see that the AO divergence is much cleaner on the 15-minute here. Yeah, with a clear higher low. Again, we've got a nice RSI structure. Okay, so you can see that in a slightly finer detail. So the limit for entry, the bid was here. And essentially, we have this 15-minute order block here. Okay, so I marked this zone out here. And essentially this was my sort of buffer for the stop. Okay, so the stop was just underneath here. The initial trade was, yeah, you know, a level 11.6 R, but with multiple TPs along the way. Okay, so I never just have one TP. It's not just, you know, stop, entry, stop, and TP. There's always multiple TPs. It's either a TP at the highs, such as this, for instance. Or if it's not a single TP, it will be a set of scaled TPs, such as this, if we can find them, etc., etc. Okay, but the final TP for the trade was at the range highs, right? So as you can see, the play out was very nice. Okay, we had the, you know, tap right down into the bid. Price then grinded up a little bit and then sort of immediately shot up from this point, okay? Before we carry on, something I failed to mention at the beginning of this video was when you are sort of analyzing the trade in a sort of premeditative manner, obviously you can't do that over here, but as price starts to break down, okay, the speed and inefficiency that was created in this price action down here is exactly what we want to see, okay? So one of my deviation rules is I can only take a range deviation if there is a clear path of either inefficiency or compression at the base of that range, okay? So here we can see that this sort of area here is clear inefficiency, okay? If you don't know what I mean by inefficiency, please go back to my inefficiency video. But essentially, this is exactly what we want to be seeing when we're taking a range deviation reclaim, okay? If there was, you know, say a pocket of supply in here, then I would be far less likely to take that entry, okay? That second entry that I took on the deviation. So anyway, back to the trade. We're in a decent position here, but at this point, I'm thinking about closing the trade, okay? Reason being is because we've had a really sharp impulse to the upside. Okay, so I had an automatic TP that was hit here, okay, at this high. I think it's for about 15% of the position. But at this point, we've had such a sharp move to the upside that, you know, it's irresponsible to not at least partially TP, if not fully TP, okay? So at this point, I didn't take anything off because I'd already partially TP'd here. But I let price action just unfold a little further, okay? So we can see here that prices within this sort of ranging structure. Essentially what we want to see for continuation are trend lines be broken to the upside, momentum continuation, or we sweep this low here and then, you know, sort of aim for the range highs. I'm just going to flip over to the hourly quickly. So this was the point at which I exited the trade, okay? Reason being is because we have this hourly divergence, okay? And we also have this sort of local sweep of the highs taking out this whole cluster of highs here. So we have a double divergence across both the RSI and the AO, and we're looking at price action here. We can see that from that body high to that body high, we have that bearish divergence confirmed, okay? Now I'm just gonna flick down to the 5-minute quickly. So the 5-minute time frame was pretty much everything I needed to see to fully exit the position, okay? So we have this local sweep of the highs taking out this whole cluster of highs here, and that's happened within the hourly bearish divergence that's been produced, okay? So my manual exit of the remainder of the position was as this 5-minute candle closed here, okay? So back to the 15-minute, we can see that that trade was then closed for a 7.6R, not including the first TP, of course. But yeah, that's pretty much it, guys. A lower time frame divergence trade on Ethereum into 4-hour liquidity. Okay, so I hope that helped you guys. I'm going to try and put out some of these short snippet videos here and there, because I think it's really important that you sort of crystallize the concepts you learn in the TA series and see how they are applied in real time. Okay, take care.